Alright, so this is a recording for today's trade. I'll be explaining what actually transpired today. Now, I'm sure that you've seen how I trade, how I look at the markets, different from what the regular or anybody else might see or might actually have an anticipation about where price is likely going to go. So today I took three trades. I took sell, buy. Now I'll be explaining them. So these are the three trades, and I'll be explaining them, why I took the trades, what I saw, what I targeted, and let's go. So this today in the morning, I actually was like, I woke up and then I saw the first thing my eye gravitated to was this equal lows. Okay, equal lows. You know what it signifies for us? It signifies sell side liquidity, sell stops. And initially, I have had the intention to like buy within this price point. I don't know what, I've forgotten what I marked, but within somewhere here. So that was just the structure. And on the monthly time frame, I had a long-term bias narrative. You see this red box level to see price go there. And if you check this other chart, you see that this candle is being bullish. So you see that this is December opening, so you want to be buying below the opening price. Okay, and also another thing for confirmation was that if you draw your Fibonacci from this low to the most to this high, you're having 0.7, 0.8 level. So 0.72 and 0.8 level was the target. My interest mostly was on the 0.8 level, which was a keen interest for me. So we're going to put this with a thick line, and I'm going to make it blue. So 0.8 was like, you know what I told you now, 0.6, 0.7, 0.8, and that was just the level of interest for me. So going to a fifth to another chart, let's see. So when I woke up this morning, I saw that, okay, yes, we're having relatively equal lows, which printed yesterday and the market closed, and then we had relatively equal lows. So this was relatively equal lows. Okay, and let's see in this chart. Okay, this was relatively equal lows, and remember that this down level part is somewhere about 0.88 discount, 0.8 discount, which was there. So when we had this relatively equal lows, now I understand that targeting relatively equal lows, we've already expanded, we've already displaced down a lot, and there will be no need for us to like retrace all the way into this 50%, 62%, 72%. We don't really need to retrace into this level. Okay, we don't really need to retrace into this level. Now, this is an advanced way of trading. Now, this is an advanced way of trading whereby you sell the market or buy the market when it is not at discount or premium. Okay, so I observed that, okay, we don't really need to retrace into that. And also, when price actually created equal lows right here, which was this equal lows, we had relatively equal lows. The next line of interest it would likely want to draw to would be a breaker. Now, out of experience, I understand this: a breaker or an inversion favor the gap. Those are the two things it would likely want to. And when I tell you a breaker, I'm talking about, like on the last video that I did, was this low, that is this low was taken. So we had this low right here, and the consecutive up close candles would be what would be 1, 2, and 3. Okay, we can add, you see this wick on this up part, you can add that to it, so we extend that forward. Now when I told you about breaker, I told you that the lower portion, middle part, the lower candle, middle candle, and the upper candle can be sensitive. Sometimes it's the upper candle that is more sensitive, and also it depends on where the inversion fair value gap is resting in price. So we have many different confluences resting there. So first of all, we have a breaker. So we have a breaker. Remember, we have narrative to target this relatively equal lows down here. Okay, so we have a breaker. We have what again? We have a CB. We have a CB. Remember, the ideology came from using the breaker. Now, when we're using the breaker, we're adding other confluences to price action. So we have a breaker, and inside that breaker, we have a CB, and inside that same scenario, we have an inversion fair value gap. So if you go over to a 30 minutes time frame, you see that inversion fair value gap resting right here. But the thing is that price left that inversion fair value gap behind. Why? Let's go back to the 1 hour time frame and you see the reason why. Now, on the 1 hour time frame, you see that we had this inversion fair value gap right here. This one right here. This was the one price used. The reason is because price traded above it. Now, let me get price traded above it, came down below it, and then came back into it. So this was the inversion fair value gap that I used inside the breaker, and we have another CB, a fair value gap here, and that was what led to the sell. Now, leading to the sell, we had price coming down, taking out relatively equal lows, which was okay. And if you use your data range or your price range, you will see that it's almost about 30 to 40, 46.6. Now, this is a concept that I would want to teach you, how to know how far or how near a price run can be, because everybody is being taught on the book that use 30 pips stop loss. That's what they've been taught. Use 30 pips stop loss, use 50 pips stop loss. The psychological stop loss is 30 pips. So most traders will use 30 pips. That is where you see price dropping 46 pips and below. You see 30 something, 48.3, dropping down to almost 50, 60 pips. Points, actually in index you use the word ticks or points. So this was the sell trade that I took, and that was it. Now, on getting to my second point of interest, which was here, looking at a 1 minute chart, when price got to that point of interest, this was what I was watching. I was watching if price had a change in price delivery, which is CIPD, change in price delivery, or market structure shift. Now, this was what happened when price got to my point of interest. It came down, went up, came down, change in price delivery. After that, came down for a CB discount entry. This way you can now start using your Fibonacci. Went up again, we came down, discount entry, and then the movement started. So we had higher high, higher high, higher high, higher low, higher low, higher low. We had a change in price delivery, market structure shift, and that was how we took off. So when we took off aggressively, I was watching the momentum. So my trade started from it started from the bottom. When I saw the 1 minute change in price delivery, I was like, okay, I am interested in this level. It got to that level. It has taken sell side liquidity. It has gotten to my point of interest. I'm seeing a 1 minute change in price delivery. I'm risking it and I'm going in. And then when it ripped higher, it expanded. What did it go for? It went for relatively equal highs. So you can see this resistance here. So it went for relatively equal highs. After taking out relatively equal highs, anybody who would have won go long upon this breakout, because if you check the 1 minute time frame, you see where the break and retest started happening. Look at it now. So we have this black line, which is the breakout. So you see that when price broke out, we had a break, and then it started retesting and people started buying it. Okay, and where is the obvious places they will put their stop loss? They want to put their stop loss at the most recent low, or at a low close to somewhere that they can have their protected stop loss. And what did price do? Price came back, drive down, came back, stopped anybody who would have want to go long, who would have profited from this move, stopped them out. And if you go over to like a 15-minute chart, you clearly see what happened. So when price stopped them out, what are we retracing? When it started coming back down, I understand that it will not take out this low. It's not going to take out that low. So when it came down, you draw out your Fibonacci again, and then you plot 0 point, you see at 0.7 Now using 0.7, what is the extra confluence you're adding? You're adding a breaker. So we have series of up close candle as bearish breaker, and we have series of down close candle as a bullish breaker. So we have this one, series of down close candle. So we see price tapping into the breaker, and also you can see we have an inversion fair value gap resting right here. So these are the confluences, and these are the things that I would add to make the trade idea much more stronger. Now these things can fail, but that doesn't mean that it's not going to work. So you see that inversion fair value gap, a bullish inversion fair value gap. So price left it aggressively. Now this is what I mean. Price left it aggressively going up because price was supposed to trade here and then trickle down a little bit, but it just bust through it, traded down again, went aggressively above it, came back into it. You see that? So when it started coming down, it came back into it, stayed here, and then we have another ripped off buy. So that was the three trades that I took today, and I don't know if I'm going to be trading again this week because I've had a good day already. So today's Wednesday, so if I'm going to be trading, I'm going to be having just minor trades and not really grand and spectacular. I might not even post on the Telegram, but this is just a trade for the week that is very good. So these are the trades, and which is okay. So till next time, have a good evening.